Cynthia, welcome to the show.
Thank you. Great to be here.
Cynthia, as a former investment banker, can you just paint a picture for our audience,
Yeah.
locally and internationally? What's going on behind the scenes? What's the strategy? Where's the confidence at in terms of the bankers based on what's going on in regards to the movement and the swift movement in tariffs today?
Yeah, great question. And because, I was an investment banker for more than 20 years and I spent the vast majority of that time actually in the dealing room.
Okay.
And so it's really interesting for me now not being in a dealing room, but watching what's going on in the sort of geopolitical, economic landscape globally. And it's times like this that I actually really miss being in the dealing room, because the advantage of having a front row seat in the markets is you actually really get a good understanding of what's going on. So to answer your question right now, Greg, there's so many moving parts. It is, we sort of describe it as an evolving landscape. And I think I'd characterize it as being uncertain, not unstable. And I think that's important because
I agree.
there's a lot of moving parts and businesses love certainty. And at the moment, we don't have a lot of certainty. And
Well, that is the certainty, isn't it? There is no certainty.
Well, that's the thing. And so actually then, when you start to think about, well, how do you manage your business through that? You've just got to really focus on your foundations. Where are you resilient? What do you actually really know that is certain? Because you know that you're going to be facing into an uncertain external environment. But yeah, I certainly miss being in the dealing room, because in that environment, you do actually really see, what's happening with interest rates, what's happening with foreign exchange, importantly, what's happening with capital flows. Like I've always really liked to watch what's happening on the equity side, what's happening on the debt side, what are investors doing, what are the big funds doing, etc. And so the bankers have got a window into all of that, but they've also got a really great window into what's the tone at board level. What are the conversations going on in the boardroom? What's the level of appetite from boards for capital raisings, for M&A? And that's always, well, in my experience, has always been also a really good litmus test for confidence more broadly. And that then, sort of feeds through to how they're feeling about their businesses. How confident are they about their businesses?
Okay, well, we got two. Let's talk about a couple of markets.
Yeah.
Say the US
Yep.
first, another market, Australia and New Zealand. We'll come to in a second.
Yep.
Maybe Asia will put in there in between. Based on your experience, what are the boardrooms talking about at the moment, and where is their level of confidence?
Yeah, well, I can speak most accurately about what we're seeing at Zip. And our business is, we've got a large business here in Australia and New Zealand, and we've got an even larger business now in the US. So the US is now about 80% of our earnings.
So much, is it?
Yeah,
Okay,
and it's growing at north of 40% a year. So actually, we've got a really great window into what the US consumer is doing, and that's helping us, obviously make decisions, etc. But more broadly, given the work that I do, I'm a non-executive director on the board of Unity. Obviously, I've got the exposure to Zip. I do get a good window into what people are thinking and feeling. At the moment, I think that confidence at a boardroom levels probably has taken a bit of a hit over the last 6 months, just because of the level of uncertainty. And organisations and boards like to make decisions with a long-term perspective in mind, not make short-term decisions. And I think an environment like this, where you've got a lot of uncertainty, it does encourage, or you can get a reaction where people are risk averse, and boards don't actually want to step into decision making and risk taking. From Zip's perspective, with the benefit of hindsight, I can say we were fortunate that we did the big turnaround of the company in 23 and 24.
I read about that, yeah.
And we've got really strong foundations now, and a business that's generating significant operating cash flows. And so we're actually really well positioned if we want to step in to the uncertainty and to the opportunities that we're seeing, and take some risks where others who may not have gone through what we've been through in the last few years, they may not be in the same sort of position.
Okay, and so in the last couple of days, we've seen the whole discussion and opening for the next 90 days with China.
Yes.
Okay.
Yep.
Deal flow.
Yep.
Going to be up? Am I going to see more M&A and IPOs at the back end of the calendar year as a result?
It's a good question to ask the bankers.
Yep.
I guess I can just reflect on what am I hearing.
What would you do if you're,
what am I hearing from the bankers?
From your experience, what do you think?
Yeah, it's really so. What
fluctuation brings opportunity too, doesn't it?
Yeah, well, and that's the thing. Like, I actually think now's, fortune favours the brave, etc. Like, now's the time to actually step in and take advantage of opportunities. But I think in an environment like this, where the macro is moving quite quickly, you're going to have quite short windows to get things done.
Yeah, okay, right.
And so if you look at, and certainly what I'm hearing anecdotally around the IPO pipeline is there are a number of people who want to get into the
That's
IPO
right.
pipeline,
Yep.
but the windows are sort of opening and closing. And so in the conversations that I've been having with bankers around IPOs, capital raisings, etc.,
Yep.
the overwhelming sort of feedback is the windows are really short. So
Okay.
you want to be ready, and then you need to move quickly to take advantage of it.
And for private equity, the capital's out there,
Well, it's an
or
interesting
is it not?
environment. No, the capital's out there. The
Yeah.
capital's out there. There's certainly been less recycling of their own assets, and so that is providing somewhat of a constraint because the IPO markets haven't been open for them to recycle their assets. But I go back to the comment I made earlier about the reason I'm always interested in monitoring capital flows is it does give you a good idea as to a good predictor of what's going to happen, what the next trend might be, just depending on where capital is flowing. And right now we still do have markets that have got access to capital. It's just a question of organisations being ready to take advantage of those windows when they're open.
So if things settle, and none of us have a crystal ball, could we be at the beginning of a brave new world?
I'm actually quite optimistic.
Yeah.
I think as long as, from an organisational perspective, and this is certainly the case with Zip, as long as you've got your foundations in a really good place and you've done the hard work to prepare your business, I actually think that the next 18 months could provide fantastic opportunities. I think it's really important to be focused on what those opportunities are and to be laser focused on going after whatever is your point of differentiation as an organisation. But actually, we're really enthusiastic about the growth opportunity, particularly in the US. And equally here in ANZ, we've got a really strong business. So I think now is the time to be stepping forward, not stepping back.
I'm going to just change something for a second.
Yeah.
Based on what you just said, the windows are quite tight.
Yeah.
Okay. From a leadership perspective.
Yeah.
A lot changing in terms of the messaging to the team.
Yeah.
I think if things do move, I hate this word, the old agility word comes up, etc. You can't sit around for long to ponder. You've got to be prepared. So have you changed at all? Has your team's instructions changed? Do you think other teams would be thinking through, look, there are going to be windows here. We are going to move twice as quick. We have to move twice as quick. Is leadership as such, the dynamic starting to change?
It's a really good question. And actually, if I reflect on the last 4 years.
The 5-year plan? I mean, seriously?
No. But so like Zip as an organisation, we've only been around for 12 years. And so people say to me, what's your 10-year plan? I'm like, seriously?
Yeah. Well, that's changed a couple of times as well, hasn't it?
Yeah, but things do move really quickly, and everything, as I always say, everything moves faster and everything innovates and disrupts faster than you expect it to. So having a 10-year plan, it doesn't really work in an organisation like ours. But just, Greg, back to your question on leadership style in an environment like this.
Yep.
If I reflect on the last 4 years where, I joined an organisation that went through a really significant period of change, my own leadership style did evolve, or I'd say the levers that I used as a leader changed depending on what was going on in the organisation. So by way of example, when things were arguably at their darkest for us as an organisation,
And they were pretty dark.
and they were pretty dark,
Yeah.
and we had some really big decisions to make.
Well, you want to share how dark they were?
Yeah, look, I'll give you some perspective, and just to give you the context. When I joined Zip back in November 2021, the two founders were still running the business, and just to give listeners some context, this was sort of 3 months after Afterpay had been sold to Square or Block as it was then.
What a great deal that was.
Like 39 billion or whatever it was.
Yep.
And Zip was very much following that sort of global growth path.
Yep.
And the market was rewarding companies for top line growth. Like what the market was asking for was just grow the top line.
So valuation's a little bit different to what they used to be.
Don't worry about profitability. And so at the time, just again for context, Zip was operating in 14 countries.
Yep.
We had 1,800 staff, and we were losing hundreds of millions of dollars, is the best way to describe it.
Okay.
Over a period of about 3 months, things turned on a dime, as they say, like everything pivoted, such by the beginning of calendar 22, our capital providers, the equity market, was saying you need to be sustainably profitable. You can't come back to the equity markets for growth. And we had a business that, as I said, was in 14 countries, and only Australia was actually making any money. Every other market was losing money.
Yeah, right.
And so what we needed to do as an organisation was be incredibly focused on a small number of priorities and turn a business that was, had a DNA and a growth mindset of top-line growth at all costs, really. We had to turn that business into a business that was focused on getting to sustainable group profitability as fast as possible and narrowing the footprint from 14 countries and multiple products to 2 countries and our core consumer finance products. And the reason that we were able to do that was because, to your comment about leadership and decision making, we had to be decisive. So my leadership style during that period became much more decisive and directive than perhaps I would really like to be. But we had a burning platform. And so we absolutely, I sat in a room with the 2 founders who, by the way, were fabulous in their willingness to have this conversation.
Tough conversation with them.
Really tough conversation because these were their babies that, we were having to deal with. And they had undertaken every transaction and they had hired every person. But we sat in a room and said, okay, this is the bright line. Everything we're doing, every business, every country, every product has either got to be currently profitable or we have to see a near-term path to profitability in the next 6 months. And if the answer to those questions is no, then we have to exit now. And that was a very hard line that we put in place. And as a result, we went from 14 countries to 2 regions, Australia, New Zealand, and the US. We exited, we had 1,800 staff. We've got about 1,000 staff now. Okay. And we made those exits very quickly in a short period of time.
What'd you cut it down to?
We went down to just under 1,000 people. So we pretty much halved the company in terms of headcount. But we also exited a lot of products. We were not only doing digital consumer finance at point of sale. We had a business lending to small businesses. I mean, Greg, you'll remember back in those days, we were doing crypto.
That's right.
We were doing fractional share trading. We were building a MIS product. Like literally, it was just everything was focused on growth. So I was very conscious.
Growth at all costs? Was it mentality or what?
It was top line growth.
Yeah,
like but this goes to how you set a company up, how you recognize performance, how you remunerate staff. Everyone in the company, their performance was rewarded and recognized only on top line customer number growth and transaction volume growth.
Drives the behaviours, right?
There was not a single metric focused on profitability. But again, that wasn't wrong. It was just indicative of what you have to remember.
This is part of the scale-up mentality as well. Like
it was
scale it all.
Yeah, it was about global growth. Yeah, and remember, the Afterpay transaction had just happened.
Yep.
Zips.
Oh, you're on a great wave here. You're thinking.
Yeah,
right?
We were riding a wave. Yeah. Zips share price was over $12.50. The market cap was north of $4 billion at the time. Like it was the right thing to be doing, except that the external environment changed so quickly that we had to.
So what changed externally?
So the capital markets. So really, we're a fintech, we're a consumer lender, we're a technology business. Back at the end of calendar 21 and into calendar 22, all those, each of any of those 3 things were on the nose, and we had all 3. So literally, and we are a capital intensive business. Yeah. Like our book in Australia is $2.5 billion, and so funding a $2.5 billion book in an environment where interest rates were rising. We had 4% increase in interest rates over that period. So you've got a rapidly rising interest rate environment, and not only is it expensive, but your end consumer, their household balance sheet is also impacted by a rising interest rate environment. So typically credit would deteriorate in that environment. So we sort of had it all coming at us from all angles, and so hence, if I go back to answer your question about leadership style, yes, we all became much more directive than probably would be my natural inclination, but that's what the business needed at the time. And the number one thing we had to do was just force prioritization. And the way to force prioritization is just stop doing things, which is what we did in 21, 22.
Tell you what, Cynthia, if I was a member of your team, I've really got to trust you, don't I? That's it. It might be forced prioritization, etc. And I'm looking over my shoulder in this market. So I guess you've got to be absolutely transparent with me. Otherwise, I'm walking out the door. Am I not?
It's an interesting question. At the time, this is where I think communication is critically important. Like I didn't sugarcoat the message.
You didn't?
No, people knew. People could see what was going on. The share price went from like $7.50 when I joined, and it hit a low of 25 cents. when I was appointed the CEO.
Thanks for coming.
Yeah, exactly. I know my friends very helpfully used to send me the share price, from the time I joined to, it's like, yeah, thanks very much. But I mean, so, the market cap when I was appointed group CEO was 250 million.
All right. Did you waver on that at the end? Were you definitely always going to go through when you're seeing this come spiraling out of control? Were you thinking, geez, shall I do this or not?
Oh, look, I absolutely had moments where I was like, not should I do this, but can I pull the company through this?
Okay.
So I was always up for the challenge of doing it.
It's going to make or break your reputation.
Yeah, but I was up for the challenge because, when you peel apart the external environment and all the things that we've just talked about, at its heart, the thing that appealed to me most was Zip has an incredible set of strategic assets, and at the time, a very poorly understood business. So if you ask people what we did, most people would say, well, Afterpay, and they lend, their average customer is in their early 20s and they fund a lot of fast fashion, etc. People thought about Zip in that way.
Okay.
And I was like, hang on, we have more active customers in Australia than any regional bank.
Well, no one knew that.
No, the average age of a Zip customer, I should ask you, what do you think the average age of a Zip customer is in Australia?
You're going to surprise me. What are you going to say?
I've led the witness now.
What are you going to say, 35 to 55?
Yeah, 40. Yeah. The average age is 40.
Yeah. Okay.
And
so not 21, 25 when I'm...
No, and we skew almost equally male and female in Australia. And then the thing that I started to talk to people about was, my strap line is always, we enable more babies to be born than anyone in Australia. And people think, what are you talking about? Mm-hmm. And I'm like, well, we're the largest funder of IVF.
Yeah, okay. Is that right?
In Australia, yeah.
Okay, right.
And so the thing that helped me lead through those periods of, pretty dark times was just reminding everyone that we've got this incredibly loyal, active customer base. We've got, tens of thousands of merchants who are connected to our platforms, and we've got tens of millions of transactions that go across our platforms every day. And we've got the most incredible data. So we've got SKU level and transaction level data on millions of Australians. So our ability to decision customers, to get insights into what's going on with the consumer, everything from buying your coffee in the morning to putting a pool in or going through the IVF process, like we've got that visibility. So we can see what, age cohorts are doing, geographic cohorts, et cetera, et cetera. And so what sort of kept me going in that period was that I knew we had this incredible set of strategic assets. I knew the products were fabulous. And I knew that the core of the business was excellent, but externally really poorly understood by stakeholders, by the market, by capital providers. And I thought, and we were navigating a period of quite significant external change. And so I thought, what a phenomenal opportunity for me to see if I can actually step up and do this. And the thing that kept me going was we call our team members Zipsters, or the Zip fam. The level of love and care from our Zipsters about our customers and about our products, about our merchants is unbelievable. And so I felt a huge sense of responsibility, but I was also very empowered by that and by them to lead the business through what was a really difficult period.
Okay. Simple question.
Yeah.
You hear all the time, first to market.
Yeah.
Whoever gets first to market dominates.
Yeah.
Okay. Afterpay.
Yeah.
First to market.
We can debate that, but yeah.
Well, that's what I'm going to ask you. No, this is what I'm going to ask. But that's my communication message being that I've taken on board. So somewhere along the line, it hasn't been well communicated, as you say. What are the key differences if we want to have that question? Because I would like the audience to know.
Yeah.
Because, yes, I knew all about After. I knew the success. Great story.
Yeah.
And, yes, we all read about the success. There's this other one called Zip out there. Mm. Oh, really? Are they just following up? So what is the difference?
Yeah, well, let me just take it back to first principles. So Larry and Pete, our two co-founders, they established the business in 2013, and their vision was to disrupt consumer finance at point of sale. So they looked at what happens when, in that really important moment when you're about to buy something and you need finance. Yep. And up until 2013, it was a very paper-based, clunky, not great customer experience, for the merchant and for the consumer. And so they wanted to disrupt that. And Afterpay started in the same year as did Klarna in Europe. So we can have a debate about who was actually first. But the biggest difference was, to their credit, and with the benefit of hindsight, this has been a fantastic differentiator. Larry and Pete actually set the business up as a regulated provider of finance. So they got an Australian credit license. They made a decision that the first product would be Zip Money, and that product was set up in a manner that was consistent with regulated finance. So from inception, we've done credit checks on customers, we've done affordability assessments, we've done identity checks, etc. Now, some of our other competitors like Afterpay were not in that position. They set their business up, not doing credit checks and looking at speed to market and smaller limits, et cetera, et cetera. So there was a real divergence in the early days around how the businesses were established. The reason I say that's a big differentiator is now, 12 years later, obviously these products have now been regulated, but we've been able to say all through the last 12 years, we are a responsible lender. We don't want to lend to people who can't repay. And so while providing really agile, fast digital finance at point of sale is really important, we're still going to do it in a manner that's responsible. And so you ended up with this divergence where our products get used for everyday spend and as well as discretionary spend. And as I said earlier, everything from, getting on the bus in the morning through to a really considered life purchase. Some of our competitors like Afterpay or others, Klarna and so forth in the US, their products tend to skew more discretionary.
Okay.
Yep.
All right.
Yep.
So, Cynthia, just more broadly, household income in Australia and the US.
Yep.
What's the average Australian get paid?
Yeah, it's interesting. And I will spend a bit of time differentiating between our Australian business or our ANZ business and our US business.
Well, this may lead to it, actually.
Yeah.
Okay.
Yeah. So I mean, you probably know the exact number better than I do, but I would have thought it's sort of 75 to 80,000 would be average income here.
How much of that is actually spent on consumption versus savings?
The vast majority would be on consumption.
Okay.
Yeah.
Not much difference in the US from what one can understand.
Well, actually, the US is interesting. So in Australia, the majority of consumers would be eligible for a credit card. And so if you want to think, and the reason I'm saying this, Greg, is if you think about, and we don't think about our customers as a credit score, but the Australian market tends to skew more prime. So you have higher credit scores here, and therefore the consumer has a broader choice of available finance. So they can go, if they want to get a credit card, they can go and get a credit card, by and large. In the US, the average income would be much lower than 75,000. And about a third of the US population would have no access to traditional forms of credit. And that's because they live paycheck to paycheck.
It's amazing, isn't it?
And it is unbelievable. And so the structure of the US market is such that you've got about, more than 100 million Americans who can't get a credit card or who can't get traditional finance or can't get it in a way that is fair and transparent. So what they do is they either have to use cash, and if they're living paycheck to paycheck, they typically don't have more than $500 in their account at any one time, so that's really hard. Or they rely on friends and family, or
they can run out after a while.
Yeah, or they go down a path that's not fabulous for them from a cost perspective, so they look at payday lending or other sort of forms of credit that are really expensive, or they have to get like a prepaid debit card, which has a bit of a stigma attached to it. So when we thought about building and growing Zip in the US, our customer base in the US is that 100 million Americans who cannot access credit cards. And so when you think about your question earlier about consumerism and what proportion of income is spent rather than saved. In the US, our customer base, they don't have a capacity to save. They are literally incredibly good at managing their budgets, but they are managing every dollar every day. And so where they use our product is for short-term cash flow and budgeting needs. So just to give you some idea of the difference, in the US, we would start a customer with a limit of $200. The average transaction size is $135. And the average limit is about $500. And the loan book turns over every 6 weeks. So we're talking about really short-term credit to customers who really need the credit. But 98% of our customers, or more than 98% of our customers, repay in full, and many repay early. In Australia, where we're talking about a customer with a much higher credit score and availability of other credit forms, you've got much higher average order sizes in the sort of couple of hundred, and you've got average limits north of sort of $1,500. So it's a very different business, and And as I said earlier, it's much more capital intensive in Australia. So our book turns over every sort of 6 to 9 months, and it's $2.5 billion.
All right.
Yep.
So how are you going in both discretionary retail
Yep.
and the necessary retail at the moment? What are you seeing in Australia versus the US? Is anything changing?
Yeah, it's very different.
Okay.
Yeah, it's
But
very,
is
very
it moving again now based on what we just saw the last couple of days as well?
I mean, in
The
the
lag effect, I'm sure.
it's got a lag effect, but in the US, where our customers, really need our finance, our products are disproportionately used for non-discretionary. So it is.
Oh, right. Okay. Yeah.
Yep.
Okay. Because I'm living paycheck to paycheck.
Yep.
I need the basics, do I?
Yeah, I need the basics, and so
Okay.
it is grocery, it's
Yeah, right.
fuel, it's paying for insurance, it's education for the kids. Like, I'll give you a great example.
Yep.
We've got a customer called Jamal. Jamal is a limo driver in Florida. And the reason we use Jamal as an example is he's what we call a loyalist. He uses us a lot,
Okay.
but he's also been in our customer immersion sessions. So we've had the chance to meet with him and talk to him about how and why he uses Zip.
Okay.
But Jamal's a limo driver. He's got kids. His income is lumpy.
Yeah.
So
okay.
if he has a good week driving the car, he'll get a couple of $1,000. If he has a bad week, he'll get $300 or $400 or maybe $500. So he's a great example of an individual who would not be eligible for a credit card, because even though his annual income doesn't look too bad, his
Cash flow.
his cash flow
Yeah.
is all over the place.
Yep.
And so your traditional financiers are going to say no to Jamal. We love a customer like Jamal because he uses the example of, in a week where he's had a good week driving and he might have $400 owing on his Zip account, he might pay it down entirely, like ahead of schedule. But in a week where he's had low income, he might have to put fuel in the car, he might have a flat tire, he might need to get the car serviced. He'll do that on his Zip account and know that he can pay that off in 4 installments over 6 weeks, and he can smooth his cash flows. So as I say, our US customers are underserved and underestimated, but they are not bad credits. These individuals know where every dollar is, probably candidly better than you and I and many of your listeners.
Yeah. Okay.
Yeah.
And do we have many Jamals in Australia?
It's different in Australia.
Okay.
So in Australia, because our products are used, our products actually span everything from non-discretionary through to discretionary. And we've got 5 products actually in the Australian market now. So literally you can use your product every day for everything that you purchase, or you can borrow up to $50,000 to do a home renovation or a pool, or as I said earlier, go through the IVF process. I think, we've still got an education process in Australia for many Australians and Kiwis to understand exactly what the opportunities are with the product. But increasingly the products are really well penetrated. More than 10% of adult Australians are a Zip customer, but there's not a great overlap between credit card customers and Zip customers.
Okay.
So in a bank, the average age of a credit card customer is more than 55 now. So it's
Right. Okay.
bit of a divergence.
So was it 2022 when you sat down with the founders?
Yeah.
Okay. So
Yeah.
2022, you've walked in and said, how many countries were you across? 14?
14.
14. Okay. Right. And you've come up with the proposition. Thanks for all your hard work, but we're
Yep.
going to have to streamline.
Yeah.
And we're going to keep this simple. We're going to focus on 2
2
markets
countries, yeah.
we're placing bets on.
Yeah.
Based on our research, our homework, and everything else.
Well, based on answering that question, because we wanted to control our own future. We knew actually if we were reliant on external capital markets for funding, we'd be in the situation that we found ourselves in 22, and we wanted to be in control of our future. And the best way to do that is actually generate your own operating cash flows and be profitable.
Okay. Yep. They say yes. Over to you, Cynthia.
Yep.
Go for it.
Yep.
Right. That was what? How many years ago?
That was 22.
22, right?
Yeah. So back in those days, I was the CEO of ANZ.
Yep.
Larry was the group CEO, and Pete was the group COO. So we did it together.
Yep.
But we made the decision sitting in it. And this is the really big difference about being in a business that's, a fintech that's been around for 12 years. We made the decision in that room, and we worked out how much time do we need to get, the people team ready to make sure that we're dealing with everyone in a kind and respectful way. But we made the decision and we announced it the next day. It just wouldn't happen.
Okay, so this is almost you could write a book on some of this stuff.
Yeah.
You think about it. All right. So what'd you learn? So what are the key steps from being in that room to where you are today?
It's a really good question, and maybe I could write a book about the learnings, because working alongside 2 founders for me was such a great experience, and they were.
They're much different to those wild bankers.
Oh, we can talk about. I've managed some really interesting people and
I
really
thought you would
interesting
have.
teams, and but actually, the thing I love about working with founders, and particularly Larry and Pete, was they're so passionate about the business.
Yeah.
Like it's their heart
Yeah.
and soul.
It's
And
their money too, right?
well, it's their
Originally.
it's their money,
Yeah.
but
And
it's
their dream.
actually we never talked about that side of it. We talked a lot about the importance of setting the company up to be around for the next 50, 100 years, whatever it might be, to really deliver the vision that they had when they first sat in the Commodore Hotel in North Sydney and cooked up the idea for Zip.
Okay.
And so working
the
with
Commodore Hotel.
yeah. So our boardroom's called the Commodore because that's where they very first met.
Right.
And but they had a vision for what they wanted, and it was a long-term sustainable vision. And so working with people who were so passionate about delivering that vision and so prepared to make the tough calls to do what we needed to do after a period of such rapid growth to really transform the company. So for the first, Larry was the CEO until the middle of 23, the group CEO, and he was running the US business, and I was the ANZ CEO running the ANZ business, and together the three of us worked through that period of transformation.
Okay, so what was the next big call? Because sooner or later there's awareness as a founder that my skills can only go so far as well. And that's a big call.
Yeah, that was, and I had two of them. And so the other thing that transpired over the course of that period was, my technical background is capital markets. I come from the debt side of the balance sheet, liability management, capital management, et cetera, which is, of course, not the exciting, typically not the sexy part of investment banking. Yep. But in a business like Zip, where you've got an external market with interest rates rising 4% and you've got billions of dollars of debt financing, warehouse, et cetera, where I lent in quite heavily through that period was actually on capital management and on the capital structure. Okay. And so notwithstanding the fact I was running the ANZ operating business, I also led a lot of the work we did around restructuring the capital. So at the time, we had convertible bonds on the balance sheet. We had quite expensive corporate debt, and we had an equity register that was, shall I say, maybe not optimised. And so the other really big thing that shifted over those years was just the dramatic change in the capital structure. And that was all about setting up the foundations so that the business could grow. And so to your question about, what was the sort of next big thing we did was Larry and Pete and I worked so well together because we recognised our respective strengths and experiences. And they didn't come from the kind of background that I did in terms of managing capital. Yep. And so they very happily sort of let me loose to sort all that out, which I loved because that's my technical background, as I said. So it felt like going home doing liability management on convertible bonds. And then we got to sort of 2023. Larry had been in the US for a couple of years. He wanted to come home. And the board, our chair started a conversation with me about would I take over as the group CEO and take responsibility for everything. And I said, absolutely. But why? And talk about dark times. Like this is when the share price was still falling at this point. This is where we ended up with the market cap of 250 mil. Well, firstly, I do run towards a challenge. I would say that. Like I tend to get a bit bored's maybe not the right word, but I'm less engaged in something that's a pretty steady state. Like I actually really do like a challenge. And Zip had plenty of challenges at that period. So notwithstanding the fact we had undertaken a significant transformation, the external market didn't yet recognise, they didn't understand the business and they didn't recognise the incredible opportunity that we had. And so the decision that I had to make was, can I lead the company through this next phase, this next inflection where we actually deliver what we said we were going to do? So we've done the transformation. We've done the hard yards.
Yes, because have the market lost confidence by this time?
Oh, yeah.
You guys are going to say you're going to deliver this, but we're not seeing anything like that.
Most people thought we were going backwards. Yeah. We were going under. Yeah.
Okay.
And it's interesting. So
you're on the life support system at the almost at that.
Oh, we were. I mean, that's not a bad description. And and a lot of people didn't believe that we could make it through. And that was evidenced by, we had some very strong banking relationships and some great relationships who stuck by us. And I still to this day am so grateful that they believed in Larry and Pete and I and the business.
Okay.
But we had plenty of stakeholders who just said, "You're nuts. You're not going to make it, and we don't want to have a bar of you." So it was interesting.
So what do you have to do? What do you need to do when you're in a distressed state like that to return confidence? What wins are you when you sit back with Larry, Peter, and say, right, we've got to get some wins here. We've got to get we've got to get the externals that start saying we can invest in it. We don't have to take the money out, et cetera, et cetera. We've got to retain good people because we lose those people, we're going to be miles behind.
Yeah.
So what's your plan here?
So it's a good question, and that's exactly what we did. So number one was prioritize and focus.
Okay.
And actually,
easier said than done, isn't it?
But then I'll go back to that leadership question around, you end up being quite directive. I literally in 22...
And it's not your style?
It's not my style, no. But in 22, 23, literally we were saying to people, here's the 3 things we're doing as a company. If you're doing anything that doesn't fit into any of those 3 buckets, you need to stop it or you need to leave Zip. It was quite brutal.
Okay.
But forcing prioritization was really, really important. And again, to the credit to Larry and Pete, but also to our Zipsters, everybody got behind us. Now, not everyone who worked at Zip got behind it. People either selected to leave or we encouraged them to move on. But that was because the company was going through a really big transition to deliver group profitability. And if you've joined a company where you just want to grow and you're not focused on profit, then we weren't the right place for them at the time.
Okay.
So the way we got through that was be laser focused on a small number of really critical priorities, like getting the company to profitability.
Okay.
And then, as I say, sort of delivering the hell out of it, just executing well. And then my role was bringing the external market on that journey with us.
So how are you doing that? How often are you spending time? Or what percentage of this day-to-day job are you spending engaging the market?
Well, so back then, when I first stepped into the role, it's interesting to reflect, Greg. That I would go out and see investors, and either people didn't want to see me, or bankers didn't want to see me.
She's at the door, is she? I'll tell her.
They're like, oh no, we don't. We were a micro cap. We were 250 mil. We were a micro cap, and so they were like, oh no, they're in a bit of strife. No, that's fine. I don't need to see her. Or banks would just say, look, you're too small and too hairy.
Right.
Good luck. But as I say, we did have some people who were incredibly supportive and loyal to us, and they helped us through. But so back in those days, I was relentless. Just getting out, pounding the pavement. We started with microcap investors. I knew we wanted to get institutions on the register. So at the time when I became the group CEO, our register, the shape of our register looked like we had about 15% insiders, so Larry and Pete and the original owners of the business. We had about 15% institutions.
And the rest retail?
The rest retail.
Mums and dads?
Most actively traded stock on the ASX.
Oh, was it really?
Yep. If anyone, absolutely. So, and we still are very, very actively traded stock. So I knew that we needed to get more instos on the book, and we needed to get out and tell the story. We needed to work with our covering brokers. And so at the time, I would have been spending 60 to 70% of my time pounding the pavement. And, all of our covering brokers had to entirely rebuild their models on Zip. It was a really, sort of hand-to-hand combat. It was individual, just getting in there and helping people understand the business. And my main focus through that period was consistency of message and delivering. So saying, in the next, and we said at the start of FY24, which was the first year that I was the CEO, we said we will get this company to group profitability this year. And now we beat that milestone, and we got there at the end of the first quarter, and we've since delivered.
How big a target was that?
It was huge. So the year before I became the CEO, the losses were sort of 300 or 400 million, and then there was sort of 50 million, and then we did the first turnaround was to get to group profitability. So this is where we had the ANZ business was earnings positive or cash flow profitable. The US business was on a standalone basis, and then together they were enough to cover the group costs. So at a group level, we were profitable. Right. And so every quarter we've then gone on to deliver growing profitability at a group level. And so now we've actually, just to give you an idea, our market cap's about 2.5 billion now, and we've indicated to the market that our earnings this year will be north of 153 million. So it's more than a $200 million earnings turnaround in the last 2 years.
Okay. Thanks for watching the No Limitations podcast, brought to you by Blenheim Partners, board and executive search firm. As a trusted advisor, we work with Australian listed groups, multinational corporations, large private companies, and social impact organisations on their most critical people choices to drive change, prepare for growth, and outperform their peers. To learn more about Blenheim Partners and executive search, visit our website, blenheimpartners.com. And now, back to the show. So if we roll it forward,
Yeah.
again, we can't predict these days. Let's say 3 years.
Yeah.
Bearing in mind what you just said about the US market.
Yeah.
Are you still sticking to that strategy of 2 markets? And
Yes.
going to focus and execute the hell out of those 2?
Yeah, we are. Look, it's interesting. So when I became the group CEO and went out and started seeing investors and analysts and so forth, the single most frequent question I got, wasn't a question, it was more of a statement, was you should sell the US business.
Oh, you should sell it. Oh, yeah. All
Because at the time, the US
the pundits
business...
on the sideline giving you that advice.
Oh,
are they?
yeah. Because at the time, the US business wasn't making any money. It was losing money. The only earnings was coming from the Australian business, and people knew the
You're
Australian...
never going to grow an empire just having an Australian business.
Yeah. And so people said, sell the US business. And I said, no, like, give me a chance to show you and demonstrate what a strong opportunity we have. And I think even we underestimated in financial year 24 how strong the US consumer would be. And we were the beneficiary of...
All right.
of
So,
that.
okay. I'm a US consumer.
Yeah.
They're not short of competition in the US. I wouldn't have thought.
Well, our customers are.
Well, are they?
Yeah.
Okay, because there's 1 or 2 else out there, is there not?
Well, there's a firm in Klarna, but they don't lend to our customers
So why am I coming to you?
because you don't have other places that you can get cash flow budgeting tools.
Do you find me or do I find you?
It's interesting. Most of our acquisition in the US is through merchants. So we end up at
too much through the merchants.
Yeah, so our brand awareness in the US is much lower than it is here in Australia. So typically you would find us through a merchant. So you go into Best Buy's checkout and you see Zip at the checkout and you go, oh wow, okay, I can use Zip, and you apply at that point and within minutes you'll be approved and you'd have a limit. Interesting statistic for you. So Best Buy, and they're a good example given the products that they sell, that's right in our customers' wheelhouse. But when we integrated with Best Buy and we were at their checkout, we did a survey and we were able to demonstrate to Best Buy that 16% of Zip customers would have abandoned their cart had Zip not been at the checkout.
16.
16.
That's a lot.
Yeah, so we say to Best Buy, like that's
a partnership made in heaven.
Net new customers that would not have transacted. And then we've got lots of great stats around increased basket size and so forth. So yes, you would find us largely through a merchant checkout, although increasingly we are doing brand above the line marketing in the US to raise brand awareness.
All right.
Yep.
So 3 years ahead and you're sitting down and presenting your final results. What growth are we anticipating?
So the US business is now, and this is why I reflect on that comment about people telling me to sell the US, it's now 80% of our business in terms of earnings. So 80% of our earnings comes out of the US, and the US business is growing at more than 40% a year.
Okay, and not Canada, just purely US?
Just the US, yeah.
Okay.
And the reason that there is such strong growth, and the reason why I'm super confident around the next 2 or 3 years. So to answer your question, we will continue to invest in the US and continue to fuel and support the growth that we're seeing there because the organic opportunity is so significant. That customer base that we were talking about earlier, more than 100 million Americans who have no other access to traditional finance, we've got 4.2 million of them. So there's an enormous number that still don't have any way to access fair and transparent consumer finance.
Do you dominate particular states, or is it?
We do. We skew to the places where these customers live, and so we do skew to the south and California, Florida, and so forth. It's not to say we don't have customers in other places, but we tend to skew there. But the other really interesting thing about these products is that you're very familiar with them because we're here in Australia.
Yep.
If you look at the percentage of total payments in the US, so the US payments market's like $12.4 trillion market. These products are less than 2% of total payments.
Right.
In a market like Australia, it's 15%. In Europe and the UK, it's 23 to 25%. So just the tailwind of growth as these products are more actively penetrated between merchants and customers means we've got a great growth opportunity in front of us. So we will continue to invest in the US and we'll continue to support that level of growth. But I also want to highlight our ANZ business, given the things we talked about earlier, just the opportunity here. We've now turned our Australian business back onto growth. So now everyone's looking at our US business saying how fabulous it is. we're in the reverse situation we're in 2 years ago, whereas I'm saying to people, we've undertaken the transformation of the ANZ business. It's now well positioned for growth. We've just launched a personal lending product in Australia. We've got a virtual low rate credit card type product in Australia. We're moving more and more into broader digital financial services here. And so the growth will continue in ANZ as well.
How have you changed as a leader then over the last few years?
Well, pleasingly, I'm not as directive as I was, when we were going through the darker times.
Yeah, but when there's a time, it's a time, right?
Yeah, when there's a time, there's a time. And so
Yeah.
just to reflect on our earlier conversation around, short windows of opportunity, I think what happens with your leadership style, and certainly where I flex my leadership style in those environments, is I do become more directive. If I feel we've only got a short window to execute something and an opportunity that is time bound, I will say, okay,
Let's make it happen.
let's make it happen. Let's
Yeah,
do
okay.
this. But my leadership style is much more around empowering others to thrive. Like I used to always say, Greg, I surround myself with brilliant people and bask in their reflected glory. I still think that's a really good strategy, and that's largely how I operate most of the time.
Okay.
So success to me is having a fabulous leadership team.
Yeah, but did you have the glorious people that you could bask in glory?
Well, you've got to get them. Yeah, not always.
You didn't have them at one.
No.
Something was going wrong.
You don't always have them, and so that's where you do have to maybe step in and be a bit more directive than you might necessarily want to be.
All right. So how do you go and get them since after you'd been directive?
Well, then you need to be able to pitch well that it's a great opportunity for them to develop their careers. And I think I've got you should ask them, but I think I've got a great relationship with my leadership team here in ANZ and in the US where, I want them to be incredibly successful. And my role is to create the environment where they can thrive and just let them be fabulous.
Is that message on repeat all the time? Like, how do you?
Yeah, it is. It is, but it's on repeat, equally balancing accountability as well as that sort of empowerment. So they are empowered to run their businesses, do their jobs, be fantastic, but they're accountable as well. And so, I'm here to support them, but if something goes wrong, then the buck stops with them.
Okay.
Yeah.
What do you look for in people these days as opposed to, well, you're in a different game compared to bankers, right?
Yeah.
So what are you looking for?
I don't think what I'm looking for has changed. Where I work really well with people is where they want that level of accountability, and they are passionate about what they do, and they're prepared to back themselves and back their own people. So actually, some of the most satisfying times in my career has been when I've identified a talent and I've seen in them something they haven't seen in themselves, and I've encouraged them to stretch themselves, take a risk, go beyond what they thought they were perhaps capable of. And honestly, in every scenario, every case, I can't think of a single example where they haven't thrived. And that's what I love most, where I watch people succeed beyond their own expectations and do things that they didn't think that they were capable of.
How do you manage, Cynthia, between Australia and the US? The language would be different, would it not?
Oh, we have some fun times around where we share a common language, but sometimes we don't understand each other.
Yeah.
Yeah. Look, it's been interesting. I mean, it's not that hard managing a business remotely. Like our US business is actually a remote first business, and so even though we've got 500 people in the US, and notionally our headquarters is in New York, our CEO is based. He lives in Grand Rapids, Michigan.
Okay,
we are a remote business, so
right.
less than 15% of our team actually live in the tri-state area of New York. We really believe in hiring the best talent, supporting them to manage businesses remotely, and just getting on with it. So that makes it a little easier for me then, because I'm remote like they're remote, and so we all just manage the time zones and manage people's availability accordingly. But your point about do we manage? How do we handle the fact that we both speak English, but we actually speak a different language?
And different motivations as well?
Well,
or is it not?
No, I don't know that we've got different motivations, because I think the sort of common thread that runs through all the businesses is we're all really passionate about helping customers and helping merchants, and financial well-being and providing fabulous products with great customer experience is common across all of our businesses, and everyone wants to see their business do well, and they want to see Zip do well and our customers do well. So that helps, having that sort of common purpose, common vision. But we do have some funny experiences where our US team will come out here and we'll say something, we'll use some sort of colloquial Australian term, and we have to translate.
Yeah, right.
We have to translate for them, and vice versa. I for example, when I speak in the US, I used to talk about the fact that we throttled the business here, and in the US they're like, throttling means accelerating from their perspective, whereas I say throttling as in slowing down, bringing back. So we have some of those sort of experiences where we speak the same language, but we're separated by English.
How much of the time do you actually spend on people?
Oh, I spend a lot of time on people.
What percentage?
You know, if I sort of force ranked my time, I'd say to you, I still spend probably 60% of my time, on external stakeholders, and then I'd probably spend 20-30% of my time on people.
Yeah.
I actually think a big part of my role is hiring the right people, empowering them, setting up a game that they can win, setting up the conditions for them to be successful, and then getting out of their way, letting them be successful.
Okay. If you had the chance to have a chat to the new Prime Minister of Australia, what would you suggest in terms of freeing the economy up and allowing the growth for the customer out there?
Here in Australia, I think there's a lot of discussion around productivity and
Correct.
Yeah.
So what are you going to say?
Well, I would say that we're a fintech, we're a digital native company. We are inherently disruptive. Make it easier for everyone to operate like that. Like, I think we've got a strategic advantage because of that, but I think that larger companies it's a lot harder for them to think about disruption, innovation, transforming customer experiences when their hands are being tied by systems, processes, rules, etc.
Right.
And so I'd be saying to him, do everything you can to simplify and let businesses grow and innovate and disrupt.
Yeah, but based on your experience versus say America, are we up for the challenge here in Australia?
Yeah, I think we absolutely are.
Are we?
Oh, yeah. Australia has a great track record of being a disruptor, being an early tech adopter. Look at, as we said at the outset of our conversation, this product, digital consumer finance, was disrupted here in Australia first. And so absolutely, we've got a customer base, and we've got a population that's absolutely willing to try new things and wants great experiences.
Mm-hmm.
We've just got to enable our companies and create an environment where businesses can thrive in doing that.
Easy to do business in Australia versus America?
Is it easier to do business?
Yeah.
Oh, I think both markets have got their external nuances, and I think
you're being very politically correct there.
Yeah, but I am, because
it's hard here, isn't it? We've got a lot of regulation, a lot of governance.
We've got it's not that easy, not necessarily easier in the US from that point of view. I mean, we don't have regulatory clarity in the US. We've got regulatory clarity here. Okay, so I come back to the point about having certainty is good. And look, we've actually had a really good experience from a regulatory perspective, engaging to make sure that in our industry you do get a balance of, don't regulate us like we're a bank. Don't regulate us like we're providing a mortgage, because we're not providing a 30-year piece of finance to someone. We're providing much, much smaller loan sizes and much, much shorter durations. And so we've actually had a pretty good experience engaging with stakeholders here. But I know that's not the case for all regulated entities.
All right. Yeah. So what's going on in diversity?
Well, that's another interesting topic. So personally, I am passionate about diversity.
That's why I asked you.
I am. And look, I think,
Well, what's your definition of diversity then? Let's clear that up, because that's blasted all around town.
Well, it's become a word that we're not supposed to say anymore. And everyone's saying focus on inclusion, focus on belonging. That's true. But at its heart, in my experience now across multiple industries and multiple teams, multiple countries, teams and organisations are best when you have a really broad set of experiences, a broad set of perspectives. And the minute you've got everybody looking like each other with the same sort of experience, you get groupthink, and you get, I think, really poor decision making, and you don't get the sort of outcomes that I think we need in the operating environment we've got at the moment. So I am passionate about creating diverse teams, and by that I mean diversity in all forms, age, gender, sexuality, experience, etc. And I know that that's not the flavour of the month at the moment, and we certainly have to be conscious of some of the changes that have happened in the US market in particular. But the value and the ethos of encouraging everyone to bring their whole selves to work and creating a place where they can thrive has not changed, and we are as passionate about ensuring that that's what happens at Zip as ever.
How was it in the banking in the old days?
Very different. I mean, I started in a dealing room,
A female in the dealing room as well.
Yeah, I started on the trading floor,
Yeah.
and the first 6 years of my career, I was in a trading role, like I was sales and trading, and there would have been maybe there were like 80 people in the dealing room, and there were 3 women.
Yep.
I sort of laugh. I tell people this these days, and they sort of laugh at me. But we weren't allowed to wear pants. We had to wear skirts. It was this is in the 90s. It was dealing rooms in the 90s were a different beast.
Yep.
I had
pretty good fun, but yeah.
Oh, they were huge fun. They were huge fun. I mean, those were the days of open outcry, and
Yeah.
it was huge fun.
Yep.
I loved it, which is why I said I miss that front row seat when you've got a lot going on in the markets. But the difference in my experience and my personal experience, Greg, is that the dealing room that I spent the first 6 years in, the head of sales was a woman.
Just UBS days? Or
Yeah,
okay,
yeah. And so it was actually incredibly unusual to have a senior female running a big part of the dealing room.
Okay.
And so I think my experience was very different because while it was fast-paced, it was volatile sometimes in the dealing room, it was never disrespectful, and I never felt anything other than equal to everybody else in the dealing room. And a big part of that was because Sharon, who was the head of the dealing room, ensured that it was that way. And then I also personally had a role model. I had an incredible female role model for the first 6 years of my carear. And this was Sharon Mitchell.
Was Sharon.
Yeah.
Okay, yeah.
And I watched her, she got married, she had a baby, she got promoted. And as an early, I was in my early 20s, that's incredibly impactful watching someone else do that because it gives you the confidence that you can actually then do the same thing.
Okay. Now, was I reading correctly? 15 years old, 14 years old?
Oh, yeah.
Is that right? You took time out? Or
I left school, yeah. I dropped out of school.
To pursue?
Ballet.
Really?
I was a ballerina, yeah.
How good were you?
Well, not good enough to do it professionally, I can say that now. I mean, I had an injury. So yes, I studied ballet from...
You're a disciplinarian then?
I am, yeah. I studied ballet from, when I was like 3 or 4. And then when I was just 15, I left school. So at the end of year 10, I did the school certificate and then I left school. And I trained full-time as a classical ballerina.
Where's this at the academy? Or?
Yeah, in Australia. So I danced with 2 Australian dancers, Marilyn Jones and Garth Welsh. They had a school.
Yep.
So I trained with them. And then I had a back injury at 18, and so I had to stop dancing at 18. So my goal in life, if you'd asked me when I was in my teenage years, was I was going to be a ballerina. Absolutely.
Swan Lake and...
Yeah, I was more Don Quixote, but yeah, absolutely. The fiery Spanish, that was much more my scene. But then, then obviously I had to take myself off to TAFE as a mature age student and get the high school certificate, and then I went to university. And from then on, my career's been much more...
So how'd you get into banking then? Come on.
Well, so I did.
It's pretty good effort, this.
Yeah, it's a big change. It is a big. I mean, when I became the CEO of Barclays, people were saying to me, "How on earth did a ballerina become the CEO of a bank?" And the answer was, I went to university.
And they weren't B grade banks you started your career in either.
Yeah, no, that's right. Yeah, no, I went to university.
Merrill's and Barclays is not something to be snubbed at. That's for sure.
That's right. It's a long way from being on the stage. That's right.
Yeah.
You're
always on stage, are you?
Well, so this is the thing. Yeah. So I went to university and I studied finance and Japanese studies and that was the link to finance and
again, I was also going to ask about that. Japanese studies.
Japanese. Yeah. Well, I say to people, okay, so the answer to that question is chart the Nikkei. So I was at uni from sort of 89 to 91. Chart the Nikkei for the 5 years before 1990, and you'll see why I did Japanese. Like everyone was focused on Japan. The Nikkei was roaring. Yep. Japan was the place of interest.
And the way of work and the focus and everything else we got ran down our throats.
Absolutely. Now, what I should have done,
driving around everywhere in the country. Yeah.
Correct. So I studied Japanese. I studied the language. I studied Japanese economic history and Japanese business studies, and I loved it.
Right.
What I should have done was chart the Hang Seng or one of the Chinese indices, because if you chart the Nikkei from 1992 onwards, it crashed.
Correct. Yeah.
So here I was with all these Japanese skills and Japanese knowledge. And
but you didn't want to pursue a career in the consulate or anything like that?
No, okay, I loved finance.
Okay, so how did
I loved the finance side of it. So I was actually doing honours in finance and Japanese, but I went at the end of my 3 years at uni. I went through the graduate recruitment process, and I did interviews at SBC as it was back then.
Yep.
Or really to age myself, was Dominguez Barry Samuel Montague, for those of you who will remember.
Yeah.
And so it became SBC just when I joined. So I interviewed at SBC and they offered me a role. And they said, you can start as a graduate and you can start in any area you want, equities, fixed income, futures, etc. Yeah, which one do you want to start in? And I had I mean, you know what it's like at university, Greg. I had no idea. All I had learnt was that price and yield were inverse. That was about it. And actually one of their team said to me, oh, if the fixed income team want you, you should go there because that's sort of the engine room of the business. And so
Good advice.
It was great advice.
Yeah.
And so I took a role as a graduate on the fixed income sales desk. And and the rest, as they say, is history.
What's the art of being a good banker?
Well, actually, I gave a speech many years ago on the parallels between ballet and investment banking.
Okay.
Yeah, and I talked about the the dark art of investment banking and the bright art of ballet. And I do believe that there are parallels. You mentioned earlier discipline. Absolutely. You need to be incredibly disciplined in both fields. They are both highly professional. They're both highly competitive.
Massively detailed.
Massively detailed. But the other thing, and I think probably the biggest commonality, is that you have to be good at teamwork.
There's one other thing, creativity.
Creativity, yeah. Yep.
And bankers who come up with great deals, you can think laterally.
Absolutely.
But a great ballet dancer's got to have some of that extra flair.
They're absolutely
it's that
creative.
flair factor, isn't it?
Yeah, very much so. But I think, I focus as much, I mean, yes, creativity, lateral thinking, but also being able to work in a team.
Yeah, okay.
You can't have a successful career as an investment banker if you're a lone ranger. You have to work in a team. You've got to bring
there were a few of them floating around.
But at stages in their careers, they brought the whole organisation to bear, and they had to work as a team.
Yep.
The really big company-changing transactions have a lot of arms and legs, and they have big teams. People have big teams around them. So teamwork's critically important, I think, as an investment banker. And obviously, if you're in the court of ballet, it's absolutely critical.
I asked a good friend of mine once, what's the big things one should learn about if they want to be successful?
Yeah.
And this was an elite sportsman.
Yeah.
He said there's only 3 things you've ever got to remember. Confidence, confidence, and confidence. Did you have it from day one?
It's actually good. I was thinking, is the word confidence or is it resilience? Because I had the confidence to back myself, and I had the resilience to pick myself up when things didn't go according to plan. And ballet didn't go according to plan.
No.
And in the subsequent years of the ebbing and flowing of a non-linear career, not everything has gone according to plan. And so, but I do think I've always had the confidence to back myself into something new or take a calculated risk. And I've had the resilience to say, well, that didn't work.
Yep.
So now what am I going to do?
Okay. Outside of banking, you spent time in tech?
Yes. Yep.
Why?
Well, I mean, this goes back to, so I'd been a banker for 20 years. I was the CEO of Barclays. I'd been at Barclays nearly 10 years, CEO for 4. I was very comfortable. And I like being uncomfortable. And so I wanted to do something.
Good lifestyle, good income.
Yeah, right. But
interesting people.
I was early 40s. I knew exactly what was going to happen every day. Like, I wasn't ready to have that as my life. So, I used to say to my friends, I want to do something that scares me. I want to get up in the morning and think, what have I done? And so I sort of polished my elevator pitch, and I got a role at Telstra. And
what was your pitch?
My pitch was, probably still is, but my pitch was, I'm a manager of capital. Managing financial capital is my technical skill set.
Yep.
And managing human capital is my passion.
Okay.
So actually, if I can find a business that either has a lot of financial capital or needs financial capital and has a lot of human capital and is going through change, then that's the environment that I want to be in. And fortunately, at the time, I met Andy Penn, and so David Thodey was the CEO, Andy was the CFO.
Yeah.
And I went from a position where I was the CEO of a bank and I was the subject matter expert in every meeting to going into an organisation where I had never covered telecommunications as a banker. I'd never covered technology.
Never covered it at all?
Never.
Really?
I covered real estate and financial institutions. My friends used to say to me, you can't even use the remote on the TV. Like, what on earth are you doing?
So why'd they take the punt on you?
Because, it's a good question, but it's a good question. I went into a role reporting to Andy as the CFO, and I went in as the head of strategic finance. And so what he gave me responsibility for were areas that were inherently familiar to me. So I had M&A, investor relations, treasury, strategy. I had corporate ventures, the Telstra Ventures business. So I had the work was familiar to me.
Yep.
The environment, the business itself was not.
Mm.
And David,
Was it as fast? Wouldn't have been as fast moving, surely.
so
Or
talking about
was it?
myth busting, it was. So David Thodey said to me at the time, I've got 35,000 engineers. I don't need another engineer. I need someone who can think laterally about what we can be doing and challenge us. And so people said to me, oh, why would you take that role? You know, you're not the CEO and it's going to be much slower moving, blah, blah, blah. It was not. Like it was the most. So I spent 5.5 years at Telstra. It was dynamic. It was challenging. It was, I felt like an air traffic controller at times, just given the amount of things going on at once. It was such an exciting business to be in, given how much was changing and how much needed to evolve, and just the scale of the opportunity. It's an enormous business. It's an enormous opportunity. And so I was fortunate that I was given a series of really interesting roles over the period that I was there, moving from strategic finance into running operating businesses. I ran all of the international business of Telstra for a while. Big role, big people role, big infrastructure role. And then I ran the new business portfolio. So I had all innovation at Telstra, all disruption. We stood up businesses like Telstra Energy.
Oh, yeah.
I took over businesses like Telstra Health. I had
yeah.
Foxtel. I had Auto Home in China. It was a bit of a pinch me moment, but I remember when I was given,
You're chair in some of those roles.
yeah,
twice,
I chaired Foxtel and I chaired Auto Home. Yeah, but at one stage I was asked to take responsibility for the build of a mobile network in the Philippines. I had a project building a mobile network in the Philippines, and I remember thinking, goodness me, I was a ballerina. What on earth am I doing building a mobile network in the Philippines? But I realized that actually, I certainly realized at that point, I had a skill set that was absolutely transferable across industries. You just need to learn the language. Like once I learned the language, I realized it's not that different to other industries. The challenges and the opportunities are often the same. You just need to learn to deploy your skills in a different environment.
Okay. You happy in your current role?
Yeah, I love it. I love it. I mean, we've been, as we've discussed today, we've been through some interesting ups and downs.
So you're starting to enjoy the rewards of the hard work now?
Oh yeah, but look, I loved the hard parts too.
Yeah, you got a thrill out of that, didn't you?
I loved the challenge, and I loved delivering what we've delivered over the last few years. I say to the team, for the first time in my near 4 years at Zip, I feel like we're on the front foot. Like we've been on the back foot for such a long time, needing to change things, transform things, prove things. Now we're on the front foot, and we've got a business in the US and in ANZ. We've got businesses that are growing, generating cash. We've got opportunities, and I'm not complacent about the external macro, but I am enthusiastic about just how much we can do and how differentiated our position is from others because we've done the hard yards already, and now we're on the front foot and we can step into that opportunity.
How far ahead as a CEO are you thinking?
I try to stay. I mean, it's interesting in a business like ours. It's only been around for 12 years.
Yeah, but you're always looking for the edge.
We're always looking for the edge, and yes, our planning cycle is 3 years, but
It can change, as you say, right?
Or it can change. But I sort of think about 3 years as being how we plan for the core of the business that we're in today.
Okay, so cool.
Actually, what we're spending time on, I'll often challenge the team and say, who's disrupting us? Like, who's out there looking at us? Who are the, two guys or two girls or whatever in a garage thinking about, undermining our business and disrupting our business? And I said, like, what are they doing? And let's do some of that as well. And so I think there's a real need for organisations to be, investing in the engine room of their business, but also thinking about what are the next accelerators. Like actually, what could drive your business, or what could derail your business. And so always having innovation and disruption front of mind. So when you ask about what's our planning cycle, yes, we have a 3-year planning cycle, but I'm as interested in what's out there now or what's over the horizon that we need to be thinking about.
I'm going to ask you 2 questions.
Yep.
On the innovation side, but firstly, the other part, the greatest threat, is that cyber?
So
If I get your records of your customers, you're gone.
We've got information and transaction records on millions and millions of
Yeah.
customers. And so even, when we were going through the transformation of the business, focusing on the resilience of our platforms was number one. And so even when we were cutting costs left, right, and center, we invested in cyber tooling and fraud tooling.
How
And
sophisticated
we still
are they
do.
now? Based on your experience in innovation and tech,
We've got
how
great tools.
sophisticated?
We've got great tools. And
Yeah.
look, and we recognize we're small relative to some of the really big players in financial services,
Yeah.
but we leverage their expertise, and we want to be part of the conversation around the experience that they're having. The difference is we don't have any legacy systems.
Oh, okay, right.
And so actually
Yes,
our
yeah.
ability
That's a
to
huge advantage,
it's a
isn't
huge
it?
advantage.
Yeah,
Our
right.
ability to adapt our systems really quickly is, I think, maybe not unique, but it's very differentiated from bigger financial services. And so we have a laser focus on cyber and on fraud, and whether that's from the board to the executive to everyone at Zip, but making sure that the team have got the latest tools so that they can monitor is critically important.
All right.
Yeah.
Blue sky, Cynthia.
Yeah.
When you're sitting there with your pen and paper at home or whatever you're doing, what does blue sky look like?
So for me, I mean, the US market is just, I don't want to say it's an unknown opportunity. It's definitely an untapped opportunity. We are just at the start of the journey.
That's a good feeling.
Yeah, it's a
Yeah.
really good feeling.
Yeah.
It's a really good feeling. And it feels a little bit like the feeling that I had back in 22, 23, where I'm like, actually, people don't understand just the scale of opportunity. And so while we're helping educate our stakeholders about the scale of the opportunity, my number one priority is making sure the business is scaled and ready and executing brilliantly on that opportunity. So the business has got to do it while we're bringing everybody else on the journey. So that is incredibly exciting. And at the same time, the work that we're doing in Australia and New Zealand to bring new disruptive financial services in the hands of customers is great. So it's nice. We've brought 2 new products to market in the last 18 months in Australia.
What are they?
And so they are the personal loan product,
Mm-hmm.
and what we call Zip Plus, which is a virtual low rate credit card disruptor.
Okay.
Larry and Pete, and I'm not casting shade on them, but they launched 2 products in 10 years, and now we've launched another 2 products in 18 months. The reason I raise that is that we are a company of disruption. Like, our DNA is disruption and innovation, and so there's nothing that motivates our team more than a new product and actually building something. And so it's been a really fabulous 18 months as we've built 2 new products. We've got them in market now. We need to scale them.
And a final sort of strategic question is, does Europe ever come into play? There's 500 million people sitting in Europe.
Yeah. So look, it's less than 2 years ago that we had a European business.
Yeah, not long ago, is it?
It's
Yeah.
not like it's not. I mean,
Yeah.
we closed.
Where was your biggest market?
Well, so they were all nascent. Like, we had a
okay.
business in the UK. The UK was quite big. Canada was quite big. We had a business in India, Poland, like literally Middle East, Singapore. We were everywhere.
Yep.
They were all good opportunities. And to your point, I could map out a framework that says there's lots of markets where the product penetration is still really low. We could go to those markets, but it comes back, for me, it really still comes back to having a focus and prioritization. And so
Yep.
I can create a compelling narrative that says,
Oh, it'd be a great narrative. Makes sense.
yeah, of course. However,
You could blow it up again too.
well, but it's not even necessarily a question of blowing it up. It's that, if you've got a marginal dollar today and you're investing that marginal dollar, we've got a business in the US and we've got a business in ANZ. The portfolio yield in ANZ is nearly 19%. The US business is growing at 40%. And as we talked about earlier, it's really early days in
And it's
the
biggest
growth
market in the world too, right?
And so I'm sort of like, if I had a marginal dollar, you'd have to convince me to invest it in a new market where we don't have product market fit and where we're not profitable. That would be a hard conversation to have, versus putting the money into the markets where we've already got very strong product market fit and we've demonstrated we can generate strong profitability.
How do you make decisions on not the big decisions?
Mm.
Do you seek counsel? Do you bounce it around a bit, or you sit back quietly and think, well, at the end of the day, I've got to live with it. Buck stops with me. I'll make the call.
Oh, no, I seek counsel. On the really big decisions, I would seek counsel. And I have a great leadership team. And so, if I was making a really big decision, my key leaders, we would be talking about it without a doubt. I've got a great relationship with the board. I've got a great relationship with our chair, and so depending on what the conversation was, absolutely she and I would be talking about it. And so I certainly I think it's really important for a CEO to have a good relationship with your chair where you can bounce big decisions, and that's certainly the relationship that I've got with Diane.
Okay. And your ideas, where do you get them from? Is that from travel? Is that from getting out of bed in the morning, going for a swim or a walk? Or is that 2 o'clock in the morning, you've got the notepad beside the bed? Or what? How does it all work for you?
Yeah, I think, well, I'm still, I guess, having trained as a professional dancer, I'm still very much focused on exercise and health and wellness and so forth. So I do spend a lot of time. It is in those sort of moments, when I'm exercising, or I'm a horse rider as well. So when I'm out riding my horse,
Yep.
they're the times where I actually get the headspace to think about things.
Yep.
And that's probably where I get my ideas, and it's not so much where I necessarily make decisions, but it's where I get clarity of thinking when I'm outside the hustle and bustle of the day-to-day of the business.
And Cynthia, what would you say to all those people out there pursuing a career? The big opportunity comes ahead, and they're hesitant in taking it.
I would say take it. Like, honestly, if I look back at the points in my career where I took lateral moves, I took step backs, where people said to me, "Why on earth are you doing that?" They are the moments where I've had subsequently the greatest career growth, the greatest opportunities, the biggest challenges sometimes, but they're the times where I've grown the most. And I think most people, everybody, underestimates their capability. So you need to push yourself out of your comfort zone to see what you can really do. So say yes.
All right. And if you're going to give some advice to that little girl who is starting out on that ballet career, what advice would you, if you look back to her now, what advice would you give her?
Just keep doing it. Like, I would say, I don't regret a single decision that I've made. I don't regret, being a ballerina and then not being a ballerina. So I would say to her, you have no idea, absolutely no idea of the scale and scope of incredible opportunities that are going to come your way. So just pin your ears back and get going.
On that, Cynthia, thank you very much for joining me today.
Thank you. It's great to catch up.
You've been listening to No Limitations.